Hi, my friends. We are coming back to a next topic, and it is selling. A short sell is a one in which you sell shares of a company's stock that you borrow the stock certificates through your stockbroker in order to make delivery to the buyer of the share. The opposite of buying first and selling later. You sell first and buy back later, hopefully at a lower price, in which case you will have made a profit. Less commissions, of course. If you are wrong, you will have to buy those shares back at a higher price. Take a loss. Before you sell short, have your broker check to the certain that he or she will be able to borrow the stock you are selling short. Since you are selling a stock you don't own, your broker will have to borrow the stock to deliver to the person that buys the stock from you when you sell it short. You will also have to pay off the stock you short any dividend that is declared via stock. Your broker will handle this for you. It isn't a major risk since the stock normally drops in price by dent when the stock goes and hence you are required to use a margin account to sell short. You don't pay interest on the amount of borrowed margin money. This is due to the fact that the broker doesn't you money because he opts from the stock you sell. Mechanics of short selling are relatively simple. If you believe the price of ABC company's common stock is headed lower, all you do is give your stockbroker an order to sell short 100 shares of ABC because short sales will be executed on the first plus tick or 0 plus tick. The occurs in the above example of hypothetical stock, we can see the time and sales trades that occurred around 12:19 p.m. on the exchange on the particular day. The first column shows the exact time made in hours, minutes, and seconds. The second column shows the size of the trade in terms of number of shares, and the last column 12 18 53 second 2000 shares traded at 54.45, followed by a 1500 share trade 12 seconds later at $54.44. Since this price $54.44 is lower than the prior trade at 54.45, this is a downtick and therefore a short sale could not be made on this trade. However, the very next trade of 400 shares is made at a price of $54.46, which is 2 cents higher than the prior trade and therefore constitutes an uptick or plus tick on which a short sale may be made. The next trade of 700 shares at $4.46 constitutes a 0 plus tick since the stock after trading up on the previous trade trades at the same price as the prior plus tick. A short sale could also have been made on this 0 plus tick trade. The next trade is then made at $54.40, lower than the prior trade at $54.46, and therefore a minus tick at which no short sales may be made. The next three trades, however, are all plus ticks or zero plus ticks, and all constitute trades at which a short sale could have been made. Next topic we cover sell short in the correct market environment. The tricky part is determining the right time to sell short. Cardinal rule 1 is to sell short only during what you believe is a developing bear market, not a bull market. The reason is quite simple. In a bull market, most stocks go up. In a bear market, almost everything will go down sooner as later. The key is to learn to recognize the type of market you are in according to the trend and condition of the general market averages. Dow Jones Industrial, S&P 500, nasdaq composite, etc. If you spot a bear market developing, selling short can be a profitable endeavor. However, selling short during a bull market is swimming against the tide, which is rarely profitable. Bear markets occur about once every 3 years, and when they do, the decline occurs at a much faster pace than the previous rise. More profit potential can be had in a 3 month period. If your timing is correct, then may have occurred in the prior year of an up market. In my view, there are only two things you can do in a bear market: either sell most or all of your stocks and get out, keeping your money in cash or cash equivalents like US Treasury bills or money market funds, or sell stocks shorts. When you liquidate your stocks after riding them up in a bull market, they will probably be 10 to 15% of their peak values before you recognize the deteriorating general market and onset of a developing bear market. Short selling could gain back some of this amount and even some additional profits. The result of both moves in a bear market, if done correctly, should be that your portfolio is in a less damaged position, armed with cash, uncluttered with former disastrous mistakes, and ready to capitalize on the next bull market and its fresh crop of exciting new leaders. Third topic that we see is what goes up must come down. Stock markets that hold up in price and seem to defy a bear market will sooner or later break down. In a major bear market, they virtually all come down. Therefore, it is a fallacy to try to shift your portfolio and buy higher quality blue chip or seemingly defensive issues because they are resisting the downtrend. These stocks are just postponing the inevitable and will normally break in price later. Within this strategy, you may end up losing less than the market averages, but you still end up losing money. Once caught in a bear market, Many inven- Many investors, both individuals and institutional alike, employ the face saving crutch that they are actually long term investors and therefore correct in their judgment because they are still getting dividends on their stock holdings. This is now not This is not only native but also foolish and risky, since the money received in dividends can be wiped out in one day's correction. The person who sells nothing at all when a bear market begins will find the pressure building steadily as the months of decline continue. It is just this person who may be finally overcome by fear and panic, only to sell out at the bottom with tremendous losses. We discussed the three topics: selling short, sell short in the correct market environment, and the third one is what goes up must come down. I wish it is helpful for your selling short strategy. Thanks for watching my video. We come up with a new lesson on selling short further. Stay tuned. God bless you.